to thank you all for taking time out of the busy end of quarter schedule to attend. I promise, or I can't promise rather, that the insights learned today will impact your Q3, but I certainly believe that they will have a material impact in future quarters. Nonetheless, I do think that this is a timely session for 2025 planning. So, quick introduction, just to echo some of what Stephen said. So, I'm Rob Soffel. I'm the RevOps expert at Notion, and I've been so since the beginning of the year, so about 9 months. In parallel, I run my own independent RevOps consultancy, and I've been doing that for just over 3 years. Prior to that, built RevOps functions from the ground up at Fidel API, which was a seed business, and I joined Onfida when they were Series C, although they had no RevOps in place. And prior to that, I spent my first 10 years operating in various startups in the US and here in Europe, most notably Trustpilot. I spent really the majority of my career in the build stage, which we'll touch on in more detail later on. And it's actually what I love most. I love building that machine versus operating that machine. And again, that will come out, I believe, in some of the content we cover off today. So what will you get out of today's session? So really two major things, and Stephen alluded to this already. So the first one is what I've defined as the quote unquote RevOps mindset. So we'll talk a bit about what that is and how to deploy that. And the second thing, really, I tried to put together a framework for a company going from 1 million in ARR up to 100 million in ARR. And more specifically within that, looking at the RevOps do's and don'ts, some of the lessons learned based on my experience, the MVP or the RevOps MVP at each stage. And I wanted to shine a light on some of the foundational components that I believe you need to have nailed during the build phase, of the growth journey rather. And so my hope there is to kind of use that checklist or use those foundations as a sense check of progress depending on your stage of growth. And so, as Stephen said, feel free to ask questions. If they're pertinent, I will answer in line. If not, we can pick up at the end. I think the webinar today is about 45 minutes whenever I tested it this morning, which leaves about 15 or 20 for Q&A. I also, and again, this echoes what Stephen said, so I think it's worth mentioning, but the webinar today and the content within the webinar, it's very much a horizontal view of RevOps through the stages. So the start, build, scale stages, which I'll touch on in a moment. We'll touch on subjects like the sales process and defining ICP and forecasting and unit economics. But we won't really go into depth within that subject matter. As Stephen said, we will be developing future content around that. But I did want to say, if you do want to speak about a topic like that, please get in touch. Claire will share my information afterwards. But today, as I said, it's really about setting the scene and show how RevOps evolves and enables the company to evolve through the stages. Okay, so first up, I thought we would start with a history lesson. And I'm sure a lot of you have heard this quote before, but the quote I wanted to share is that those who forget the past are doomed to repeat it. And so, what you see on your screen here is the T2D3 block, if you will. And so I wanted to show that because we just came from an era of T2D3 growth expectations. And if you're not familiar, T2D3 stands for triple, double, 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 which is the expectations of growth rather from a company's inception. I was actually having lunch with a founder friend of mine on Saturday, and we had a laugh about this number because effectively what that really means is a company from its inception needs to grow 72x, grow its revenue specifically 72x in 5 years. And I think that sounds a little bit ludicrous now, but it wasn't so long ago that was the norm. So like 2020, 2021. And so with that T2D3 sort of growth expectation, the expectation was to basically be evaluated at $1 billion within 5 years' time. And so with those sorts of growth expectations, what kind of behaviors did we see? What kind of behaviors did that drive within the businesses that we operated within? And so first thing, probably no surprise to everybody, looking at it from a top-down view, it's just hire more reps, right? We need more reps, we need more pipeline, we need more sales, let's hire more reps. If that wasn't working, okay, now we need to 10x MQLs. Doesn't matter where we're getting them from. Let's just 10x them because that's what we need. And so these sorts of growth at all costs, these sorts of growth at all costs sort of initiatives failed to produce, last but not least, it was time to raise more cash, right? And so that growth at all costs cycle continued. And so In addition, to those growth expectations, there also existed a misalignment between go-to-market teams and ultimately the buyer journey and seller journey. And I just want to call out a few of the hallmarks or some examples of a misaligned go-to-market organization. And so, first thing I want to call out is just the team operating in silos, right? So operating in silos, that means that there's multiple sources of truth. Marketing has their numbers, sales has their numbers, finance has their numbers, maybe ops has their numbers, right? But the point of that is that you waste an incredible amount of time reconciling that information, and ultimately there's a loss of trust in the numbers, which creates a whole cauldron of issues within go-to-market, which I won't go into all of them here. Second thing is, and I've seen this actually a lot, where there's different definitions of the same thing, right? And the example I wanted to call out today was, I've seen many instances where there's been multiple definitions of a customer. CS has their own, sales has their own, finance has their own, right? And so something as simple as how many customers do we have, it's very difficult to actually answer that question when you're not aligned. Third thing I wanted to call out was a sort of, I guess, one-sided seller-centric definition of something like an MQL. And I'll pick on marketing and MQLs here a little bit, but marketing basically in the old way of doing things sort of gauged buyer readiness based on presumptions and assumptions of, did they spend 45 seconds on our pricing page? Okay, brilliant. Let's pass that to sales. Versus high intent actions, which is request a demo or I want to talk to sales. And so, traditionally, and this is what I mean by a lack of alignment between buyer and seller enablement, we weren't meeting the buyer where they were. We were forcing those conversations from sales, which, had very low conversion rates. It was a bit of a waste of time in most cases. And so to me, that's a total misalignment between buyer and seller. And then lastly, and probably of equal importance, is misaligned incentives driving misaligned outcomes. And again, I'll stay with MQL on this one, but a great example of that, and one that's quite a kind of a commonly understood one, which is targeting marketing, for example, on MQLs versus say something like pipeline generation or revenue, and aligning the whole of the go-to-market org. And so, one quote I wanted to share with you, and another quote I should say. So, Sam Jacobs, who runs Pavilion, he from time to time he often quotes a friend of mine called Cassie Young on his LinkedIn post, and the quote that he says that Cassie originally said was, "Marketing can't be crushing it if the entire company isn't crushing it." And so, to me, that really resonated, and I think that says everything about the misalignment of go-to-market. You can't have one team crushing it if the org isn't actually crushing it. And so, we as RevOps or we as go-to-market, operators need to be operating as one unified go-to-market org. So the combination of unrealistic growth expectations and misaligned go-to-market organization and a misaligned go-to-market organization, really the result of that is unproductive, inefficient growth, and that's kind of what we're going to be talking about today. So when the right things aren't prioritized, when you have a loosely defined ICP, for example, or you don't install the right disciplines that you need to, companies grow inefficiently. And so that leads to, among other things, some of the things you see on your screen here. So my big one, and if you know me outside, I guess, of this webinar, you'll hear me say this all the time because I do live, eat, and breathe this, but the accumulation of operational debt, particularly at the build stage, which I'll touch on in a moment, but that accumulation of operational debt across processes, across systems, across terms and metrics, it really slows down the go-to-market org even further than just quote unquote operating inefficiently, and it makes it incredibly difficult to maneuver. It's like your legs are in molasses, and it's difficult to kind of move in any direction when you're saddled with that operational debt. The second thing is poor performing LTV over CAC. So you're bringing in the wrong customers who don't really pay for themselves, and that that poses a problem over the course of time. Thirdly is customer churn. Obviously customers churning is bad, but what's worse is you didn't see it coming, or you don't know until it's too late and you're unable rather to course correct. And then lastly, layoffs, right? So we've all seen this over the last couple of years. When a business fails to perform expectations or to expectations, difficult decisions have to be made. And so I was part of the last Notion Growth Summit, which was in June at Snowflake's offices a few months ago. And Harrison Rose, who's also he's co-founder of Paddle and GoodFit, but he's also an expert at Notion as well. And he said a comment in his session that really, really resonated with me. And he said rather, that a company is more likely to die of indigestion rather than starvation. And the GTM bloat and growing inefficiently, that speaks directly to that. And so that drives home the importance of being disciplined and being measured in your approach. You can't and you shouldn't be everything to all prospects in all segments all the time. You have to be more measured and more focused than that. And so to drive my point home just a little bit further, as part of this sort of history lesson here with the T2, D3 era we've just come from, the ultimate demise obviously is companies shutting down. And so I had to look at some Carta data last week when I was putting the deck together, and I saw that 58% more startups shut down in Q1 24 versus Q1 the previous year. And so, I can't say for certain that they shut down due to undisciplined, inefficient growth, but I think it's safe to assume that it played a part given the ubiquitousness of growth at all costs, the growth at all costs mindset. And so, how do we pivot away from this inefficient growth and grow our business more methodically and more intelligently, again, which will be a theme throughout this webinar. And the first thing, and surprise, surprise, it's enter revenue operations. And so, the foundation of RevOps has always been to do more with less, right? To derive efficiency across go-to-market. But it's only really recently, within the last sort of 5 or so years here in Europe, that the function star is rising. And so founders, I think, founders and revenue leaders, I should say, are finally starting to get it. And so, the kind of the old understanding of RevOps as a system admin or a report builder or sales ops with just a new label on it is moving by the wayside or going by the wayside. So it's absolutely in vogue today, given the emphasis on productivity over growth. And just to illustrate this, in the US in 2023, head of revenue operations was the most popular job title on LinkedIn out of all job titles posted on LinkedIn. So that should give you some indication of what's happening in the transformation of the role. And you might be asking yourself, why Terminator? So it's, this Terminator 3, basically, it's Rise of the Machines, which is, again, going to be a theme of this presentation. And, I chose that because we really need to think about our go-to-market organization as a revenue machine. So why machine? Why use machine as an analogy? And so a couple of things. First thing is that machines are reliable and machines are predictable, right? And then the second thing is that machines can easily repeat processes. And so tying that in a bit of a tenuous way to go to market, I'm sure you're all familiar by now with the bow tie model from Winning by Design, of which I'm a fervent subscriber. But why the bow tie model, and what does that mean in the context of a machine? So really, there's two things. The first one is it's no longer just about the left side of the bow tie, right? The top of the funnel. Just do more and do it now. We've exited from that sort of world that we inhabited. And so again, it's not just about doing more. We actually have to be mindful of the right side of the bow tie. And then secondly, it's really about repeatability and predictability, which you can see on the top of the screen. So, repeatability and predictability start, in my opinion, with a standardized approach to go to market, a machine-like approach, if you will. And so by standardization, there's a couple of things I mean. So the first thing is that you must clearly define your customer journey and your customer life cycle. You must clearly define your go-to-market processes, like your lead management and lead qualification processes, your sales processes, or sales process rather. Also your customer life cycle, so your post-sale process. Those processes must be defined with clear stages, clear goals, clear activities, and clear qualification gates. Effectively, you're removing the subjectivity out of the equation. The second thing within the standardization really is defining and measuring your conversion metrics and continuously improving on them over the course of time. And so we'll come back to this later, but thought it was worthwhile to throw up that bow tie now because it does play a theme throughout the webinar, but also how I think about go-to-market. So RevOps as a mindset. So this is something I've been thinking a lot about, particularly as Steve and I have been talking about this webinar today. And so, startups won't always have the luxury of hiring a seasoned RevOps pro, especially early on. But there are principles that can and should be applied from the word go. And I think that the sooner that you can start using data and insights to inform your decision making and minimize that gut feel decisioning, you'll be putting yourself in a better position to grow intelligently. And so, and I'm kind of toying with this sort of analogy here, but think of RevOps as like a method, a sort of Socratic method of continuously improving the output of that machine. So questions like, and I'll just read from the screen here, but questions like, should we invest resource in outbounding to enterprise prospects? Why not? There are a lot of considerations when deciding when to move up market or if to move up market. With enterprise customers come enterprise expectations. Do we have the resource to actually to service those customers? Is our product enterprise ready, for example? So lots of consideration around that. The next one, is our drop in customer activation rate, so something on the right-hand side of the bow tie, is that due to a handover and onboarding problem? So is it a CS problem? Is it a sales problem? Is it a qualification problem? Is it ICP? Is it all of the above, or is it some of the above? Again, don't really know, but those are the types of questions that we need to be asking ourselves if in the event we do see our customer activation rate dropping. Last one is, if you're doing some, I don't know, scenario planning, for example, what would happen if we increase conversion rates by 3% across the board? And so this sort of like Socratic method or this RevOps mindset puts you in a position to make these informed data-driven decisions. I'll pause there just to get a sip of water. So with that, so defining the RevOps mindset. So again, thinking about how to best communicate this, and I came up with really 5 principles that enable the quote unquote RevOps mindset. It provides what gives you the tools, I suppose, to continuously improve your go-to market. And so, first of which is systems thinking, right? You're building a machine, so you need to define how that machine is operated. And identify the levers and dials through which that machine is fine-tuned and can respond to change over the course of time. The second one, is thinking holistically, and this one's big for me. Now, this speaks to the bow tie, but changes do not happen in a vacuum, right? So you must consider the left and right side of the bow tie in most of the decisions that you make. Thirdly is harnessing technology and doing more with less. Again, bread and butter RevOps stuff. But one thing that I advise, particularly early stage clients or clients that don't necessarily have a RevOps or systems administrator within the business, is tooling is rarely the answer to your process problems, right? So, how can we use tech to enhance and optimize rather than to define and invent? Fourth one, and again, recurring theme throughout this, but how do we actually scale intelligently? So it's a constant, delicate balancing act between overinvesting and underinvesting. So, knowing what investments to make, know what investments that make sense, and then when to actually make those investments. And just to kind of put a finer point on this, so that those investments can be resource investments, process investments, tooling investments. It doesn't matter, but knowing what to do and when to do it is part of that delicate balancing act that RevOps and the RevOps mindset allows you to do. And then last but not least, incremental improvement and compounding benefit, right? So applying that continuous improvement ethos, across the board. And so many small positive changes you can see on the screen there over time will have a compounding benefit. And so applying the RevOps mindset. So, how can we actually apply this mindset? Like, what does it actually look like in the real world? It's all well and good to have theories and kind of classroom exercises with that RevOps mindset, but what does that actually look like in the real world? And so what you see on your screen is a really basic and admittedly unsophisticated customer life cycle, if we will. So you've got prospect on the left, you've got opportunities, customers, activation, and retention on the far right, and then the green boxes are effectively your ARR, so signed, activated, and retained, as well as your average deal size. And so, if you look here in this particular example that I want to show you, you've got your status quo. Is that status quo? Let's say it's 1,000 prospects, right, or 1,000 leads. You've got a 10% conversion rate to MQL, a 40% conversion rate to SQL, 50% conversion to op, 20 to customer, 80 to activation, and 90% to retention. And what happens there is it spits out, based on a 30K average deal size, you can see the ARR signed, activated, and retained within this particular example. Excuse me, I just lost my train of thought there. So some common misconceptions or common assumptions that I'm sure everyone on this call has heard in order to improve performance, right? So you look at the status quo, how do we actually improve that? So we need more MQLs, we need more leads, we need more pipeline. And it's something I hear every week, and I've admittedly been guilty of it myself. But what happens if we, don't take that approach of just more in the top of the funnel, and we look at the data, and what happens if we, make a bet, for example, that we can increase our funnel conversion by, in this instance, making, I guess, further defining our ICP. So a tighter ICP definition, tighter messaging, and improved qualification. And so what you see there is basically it's fewer prospects, sure, right? It's a tighter definition, it's tighter messaging, and we're being a lot more strict on our qualification process and our qualification framework. But the net of that is that it actually increases conversion across the board, right? So fewer leads top of the funnel, increased conversions throughout. And then you can see here at a 30K average deal size, you can see the ARR that's spit out afterwards, and you can see the increase from the first scenario. And then another one I want to share with you is, what happens if we improve our deal discovery process? If you're analyzing your pipeline using the RevOps mindset, and you see that the vast majority or a significant portion of deals are lost at discovery, and you start to pull the thread and try to understand why. And maybe there's an initiative, maybe it's training, maybe it's coaching, maybe it's enablement. I don't know what the answers are, but it's about putting yourself in that position to ask those questions. But you decide you want to make a bet that, okay, we need to improve that deal discovery process, and let's say that bet actually works out for you. So again, in this instance, you're not going to get more leads, you're not going to get more MQLs. SQLs and ops stay the same, but what does change is your win rate, right? So you're winning more customers, which means more customers activate, which means more customers are retained. And then also because you're improving that qualification process, that discovery process, maybe before that, your sales reps didn't know how to multi-thread. Maybe they didn't know how to bring in other teams to maximize the value of that deal. So again, in this instance here, that average deal size jumped up a third, basically, to 40 grand. And again, you can see the knock-on impact from there. And so, this is the continuous improvement approach that I mentioned before. It's about really what's the status quo, find out what's going on, creating benchmarks based on what that information is telling you, isolating those challenges and opportunities, and then addressing them from there. And so it's almost never just about we need more leads, we need more pipeline. And like I said, it's a little bit of an unsophisticated model, but it does illustrate the point. Excuse me. So how does this play out across the stages of growth? So if you haven't seen this before, so this is Notion's growth framework for startups starting sub 1 million in ARR, going to 100 million in ARR. And just to share a couple of what you see on your screen, a couple of just a quick explainer, rather, I should say. So you've got the start stage, which is finding product market fit, excuse me. You've got the build stage, which is establishing go-to-market fit. And then you've got the scale, which is scaling go-to-market fit. And so, what is RevOps' role throughout the start, build, and scale stages of growth? And so you can see on the screen, so it's RevOps and the path to 100 million. Now, I put together 4 RevOps modes, if you will, that correspond to each phase of growth. And so on the start phase, you've got RevOps as a mindset. So, going back to what I said a couple of slides ago, you probably won't have a dedicated hire for RevOps, but you should absolutely be thinking and deploying that RevOps mindset, as early as you possibly can. The second one is setting the foundations. And again, and I'll touch on this in a moment, but this is where I see a lot of businesses trip up, and more on that shortly, as I said. The third one is strengthening the foundation. So, as you begin to ramp production, the system needs to be able to handle the weight of that production. And so strengthening those foundations is critical. And then last but not least is optimization. So, the machine is running very, very smoothly, or it's showing signs of running smoothly. How do you optimize and continuous optimization thereafter? So first one at the start, finding product market fit. Now, as I mentioned before, it's RevOps as a mindset. That's the mode that you need to apply within this stage. So what are some of the characteristics of this stage? And so these are non-exhaustive, right? But these are just things that I wanted to call out that I've seen in my career. So first thing is, you're really at this stage, the business is proving a concept. your information gathering. You're talking to prospects, talking to customers. It's all about gathering information on what works, what doesn't work. You're probably running a founder-led sales motion at this point. And I would imagine you're using Google Sheets or Notion as your CRM. And so, as I mentioned to you before, at this stage, it's unlikely that you will have dedicated RevOps, but you still can and should apply that mindset. And so just want to call out a couple of the do's and don'ts. And it's pretty simplistic at this stage. But on the RevOps do's, the first thing is your best guess ICP and target personas. You're not going to have data or the insight really. You probably won't have the data and the insight to make that call and to really, hammer home and really, accurately define that ICP. But you can go with your best guess and test that. Second thing is tracking prospect and customer interactions and establishing those feedback loops early on. For me, I've seen businesses that don't actually live, eat, and breathe this information. And for me, it's gold dust at this stage of the journey. Not only are you finding out what people like or dislike about the product, which you can then feed back to the relevant stakeholders, but you're also learning about what's working and what's not working with your processes. Am I asking the right question? Am I getting the right information? Am I landing the right messaging, that sort of thing. And so that's absolutely critical for me at this stage in order to progress to the next stage of growth. And then lastly, I wanted to call out that you probably won't know your customer lifecycle necessarily at this stage. But this stage really is about formulating a hypothesis of what that customer lifecycle might look like. And so, again, you won't have all the information to solidify this, but it's worth kind of considering that now and how you define that. And I think that, I called out there, how GTM motions play into this. The reason why I called that out is because with respect to your customer lifecycle, a PLG motion might be slightly different than a verticalized SaaS top-down kind of account-based motion. And so there are some considerations, when defining that customer lifecycle. It's not just about jumping into HubSpot and just setting it up, right? You need to kind of consider that in how they play into the definition of that life cycle. Then as far as the don'ts go, so I'll rattle these off what's on the screen, but please don't overinvest in tooling or putting a tool before a process. This is where the operational debt comes in. If you start to invest heavily, it could be a bloated spend or a waste of money. You start to invest heavily, I should say, in tooling. But if you start to think tools will solve your process problems, they won't, quite frankly. And so you'll, like I said, start to accumulate operational debt. The second one is overinvesting in processes or process design. They're going to change 5 times, 10 times over the course of the next 6 months, 1 year, whatever it might be. So don't overinvest, do MVP to give you visibility and move on from there. And I think a good enough approach works at that stage. And then lastly, and I can't believe I'm saying this, but don't integrate your platforms and your tech stack just because you can. If you think of a marketing automation platform, or if you think of a CRM or even a sales engagement platform, these platforms house specific data as it pertains to the various processes that they run. And just joining everything up without controls, without knowing which data should be the master data versus not, or which data should be read and which data should be write, without a clear customer data strategy, I wouldn't just plug everything together just because there's an app in the App Store, for example. So those are a couple of don'ts that I would RevOps don'ts that I would avoid at this stage of growth. So moving forward, and I broke down the build stage into 2. So there's establishing repeatability, and then there's increasing predictability, because I thought it was worthwhile putting them into 2. But this stage, as I said, establishing repeatability. And this one, as I said, is really about setting the foundations. And as I said a couple of times now, this really is where I see a lot of mistakes being made. There's probably a recent investment, potentially a Series A, and you're looking to deploy capital, and that often ends up in unmeasured and scattered approach due to competing priorities, right? So money spent kind of a bit all over the place without much consideration. Again, the accumulation of operational debt. Some examples I wanted to share there are, maybe half-heartedly rolling out a partner motion or moving up market, as I said before, to enterprise without proper consideration. And so just a couple of things worth calling out with this one. And some of the characteristics, again, of this stage, which I've just touched on, but maybe some recent investment to be deployed. Typically, you have one go-to market motion working or seeing traction. Maybe you're testing others. you probably do have functional leaders within the business. And again, they have their expectations of how to operate and what they want to do. And you may or may not have a dedicated person looking after revenue tooling. And so a couple of things, again, worth calling out within, RevOps do's and RevOps don'ts. So the first thing is, and this is actually, where I spend a lot of my time, which is establishing those foundations with, as you kind of enter as a priority, as you enter this build phase or build stage rather. So you must, if you don't have it yet, you must get MVP visibility of your funnel. And so how do you actually get MVP visibility? What are those foundations? You can see the list there. So it's about ICP, target personas, and value props, orientating your go-to-market, defining that bow tie model from left to the right side, defining and implementing a standardized sales process, which we talked about a few minutes ago, defining a high-level qualification framework for both deals and leads. How should we be qualifying our leads? What information must we ascertain to understand? Are they good, bad, ugly? Do they move forward, or do we nurture them, or do we reject them, right? So putting some rigor around what that qualification framework looks like. And then lastly, and this one is often overlooked, but establishing common terminology, language, and unified understanding of the definition of metrics, of terms, those sorts of things, that in language as well, that align the rest of the go-to-market organization. Second call out here is establishing a RevOps reporting and operating cadence. Now, it's all well and good to have that visibility and to have access to the data, but unless you're bringing it to life, who cares, right? And so in this instance, even if you don't have a dedicated RevOps person, I'd recommend figuring out a way to get some scheduled reporting and insights being delivered rather to the relevant stakeholders on a scheduled basis, that people know what's happening within the business. Again, it's not just about establishing that visibility, but it's actually what you do with that visibility, I think, that matters. And then last but not least, within the do's is starting to develop a habit of a bottom-up sanity check of a plan. And I can't stress how important this is. And so what that means in the real world is, if you have a top-down plan, it's we need to get X amount of revenue or Y amount of leads or whatever the plan actually states. A couple of examples of questions that I've had to ask, my founders in my career. So first thing is, can we really expect 100% of our sales reps to hit 100% of their quotas in a given time period, right? I mean, to me, that's not possible. It never really happens, but the model says so, the budget says so, the plan says so. So kind of tempering it with that sort of line of questioning. The second one I wanted to call out was, do we really expect revenue next quarter from reps that aren't even in the business yet, right? So that kind of speaks to ramp period and RevOps understanding what it takes to actually ramp a new employee, whether it's SDR or whether it's a salesperson, right? So again, tempering that top-down approach with the bottom-up sanity check, as I called it. A couple other ones I'll just rattle off here. So, can we really expect $1 million or £1 million from a product that's not yet launched? And then lastly, can we justify a 2x increase in our average deal size without understanding how we're going to achieve it? Is it training? Is it improved process? Like, what justifies that 2x increase in average deal size? And so those are a few calls I wanted to mention in the do's. And on the don'ts rather, I should say, and I'll try not to read all of these word for word here, but don't accelerate go-to-market without having the foundations established. If you have a half-baked process, a sales process, for example, in the UK, don't copy and paste that over to Germany, for example. Don't ignore the accumulation of operational debt. Have a plan to address that if you do feel you're accumulating it. If you don't trust the numbers, if you don't trust the data, have a plan to solve that, right? Because that's operational debt that will, it'll burden you until it's until maybe it's too late. The other one I wanted to call out here is don't automate for automation's sake. I've seen that quite a bit. And then the other one I wanted to call out on this one is don't fail to measure whatever it is you're testing. If you're putting in the effort to, for example, in this example, test outbound messaging and test a new outbound process, or maybe you're trying to go into a new segment, or maybe you have a new use case that you're trying to test the messaging, don't fail to measure that, right? Because it potentially could be lost. The performance could be lost, and the feedback would effectively and essentially be anecdotal, which we don't want as RevOps. So moving on from there, so increasing predictability, and this again is part of the build stage. And so the RevOps mode here is strengthening rather the foundations. And so just wanted to call out again a couple of characteristics. So the company's probably growing up, which, is actually an interesting feeling when you go from kind of the Wild West into a more grown-up company. But there is a distinct feeling when a company, usually for me, it was raising Series C. It's okay, now we need to be a bit serious here, but the company's probably growing up. You probably have a bit more sophisticated distribution. In this case here, I put down channel partners. Another big one, and this really for me is a transition from a RevOps generalist to a RevOps kind of specialist. But in general, you're transitioning from generalist hires to specialist hires, and I think that's where RevOps will shed some of its responsibilities and kind of revert to a more traditional RevOps role. And the other thing worth calling out is there's going to be relentless focus on unit economics, things like gross margin, and so under the theme really of predictability, right? Just kind of keep that in your mind. So, a couple of things worth calling out as RevOps do's. So, you can't be predictable unless you have a sales methodology, which further standardizes the process and gets you closer to the deals than you otherwise would have been before. So that to me is a prerequisite for predictability. In addition to that, and these two are kind of linked together, you must establish a rigorous forecasting process, right? It's not just about what the rep feels like. You have to apply science to it, right? So figure out what that rep forecasting process looks like is paramount to increasing predictability. Third one is, being able to segment and understanding the segments of your prospects and customers, know what your best or start to know what your best and most profitable, again, unit economics. And again, the other thing with predictability is, at this point, if you haven't done so already, establish controls around contracts and pricing. So a good way to do this would be a CPQ. And again, do away with the wild, wild west approach. Put some structure, put some rigor around the contracts that are being signed, the terms that are being agreed, the billing, the billing set up, for particular clients, and so in the pricing as well, as part of that initiative. And then last but not least, again, this is paramount to predictability. Knowing and identifying and tracking your leading and lagging performance indicators, you need to know what's likely to happen before it actually happens. And so for me, those are the five biggest actions you can take to increase predictability from RevOps perspective at this juncture, or at this stage, I should say. And then a couple of don'ts I want to call out here. So first one is don't use a sales methodology as a checklist. It must be embedded into the sales org properly. And there have only been a handful of times where I've seen something like MEDPIC embedded properly into an organization. It's not a list of fields in your CRM. It's not a scoring saying it's been completed or not. It's not that simplistic. It really is an ethos change in the business that needs to be bought in from the top down, from the bottom up. It's got to be, the language needs to be used in pipeline meetings, in deal reviews. It's a constant, again, continuous improvement measure to understand, are we really as close to these deals as we think we are? Do we really think this deal is going to close by this date at this amount? Or there may be risk to the deal that we don't see. And so embedding that properly it goes such a long way in predictability and increasing predictability. Another one I want to call out here is forgetting about attribution. So attribution is hard. Attribution is never ending. And forgetting about it, I think, and not really knowing what your best channels are, what your best sources are, I think is a big own goal, and not having it done at this stage, is, like I said, is an own goal. Okay, so we've got 3 more slides left, and we've got 17 minutes. So I'll try to go through these without reading each of the things on the slide. But the last one, as far as the growth journey goes, is scaling go-to-market fit. And so again, optimization, optimization, optimization. You've got C-level representation and C-level expectations. You're probably expanding into new products, new channels, new geographies, looking for new revenue opportunities. And there's a relentless pursuit of productivity. And you can see there the kind of free cash flow comment where you want to spend $1 to make 4, make 5, make 6, whatever that might be. And so at this point, RevOps role, in my opinion, shifts more to a support and enablement role. The machine has been built. You will have an ecosystem of revenue tools and platforms to maintain. You will have hired specialists to own those relevant domains, whether it's deal desk, whether it is Salesforce administrator, whether it's marketing operations, whatever it might be. And you might have even lost, say, for example, strategy. Strategy might have gone under the strategy umbrella or the CRO umbrella. And so, like I said, this is really about RevOps kind of moving more into a support and enablement role. And just a couple of things I think worth calling out on this. And it really has to do with the team development. So at this point, you probably need a team that's in line, that has grown in line with the rest of the go-to-market org and its requirements. And so, one of the don'ts that I wanted to call out, excuse me, sorry, one of the do's that I wanted to call out was, specialize the RevOps team, right? So staff for what's required, whether it's customer ops, partner ops, if you have a big partner channel, Salesforce admin, deal desk, whatever it might be, you have to respond to the needs of the business at this point. The other thing as well that I have, well, I think it's quite important, especially if you have a sizable RevOps team with a lot of stakeholders to manage, is developing a framework for defining and executing a product or a RevOps roadmap rather, excuse me, and communicating that effectively to the relevant stakeholders. Being proactive in how you communicate what's happening under the umbrella of RevOps is of critical importance at this phase. And then lastly, there's lots of efficiency gains and optimize the ways of working through automation. So I won't go into the don'ts in this one, but just jumping over into RevOps and the path to 100 million. And so what I tried to do here was show RevOps through the stages and the relevant ARR milestones, and then the goals, the RevOps modes, and then the RevOps MVP within those stages. So you can see RevOps in the path to 100 million and what it looks like from start, build, and scale. And so last slide before Q&A, I wanted to touch on the bow tie once again. So it always comes back to the bow tie with me. And so what's different on this slide is there's an overlay of what RevOps owns or facilitates across that customer journey. You've got the ICPs, the personas, the value props, the target accounts, the segments, the qualification framework on the left, the green boxes. That's how you orientate your go-to-market. And then you've got the blue boxes, which things like data model, data structure, customer lifecycle, the processes, tech stack, so on and so forth. And so I think the thing worth calling out here is that it's important to note that none of these things are one and done. Like ICP, for example, that will continuously, evolve. New products, new market segments, new geographies, so none of these things are one and done. There's a constant and a continuous improvement that needs to be made across the board. And also things won't go according to plan, right? So you'll need to kind of adjust accordingly. And so I think the goal and what I wanted to get across with this slide here is that really, again, just to reiterate, it's about aligning the go-to-market organization. In the RevOps mindset really is about it's about creating an environment where you can put yourself in a position to monitor what's happening with go-to-market, what's happening across that bow tie, so you can make the changes that you need. And again, just to drive the point home, it's really about putting yourself in a position and your business in a position to continuously improve.